Is your city one of the ticking time bombs in the U.S. housing market? With mortgage rates soaring past 7%, insurance premiums topping $5,000 in some regions, and home prices inflated by over 60% since 2020, conditions are beginning to appear unstable. In places where the average home now costs $500,000 or more, while incomes remain stuck below $70,000, buyers are pulling back, listings are piling up, and price cuts are everywhere. Could a housing crash be just around the corner? This analysis uncovers 10 U.S. cities where the housing market is on the brink of collapse. Number 10. Huntsville, Alabama. Huntsville, Alabama, you've probably heard, is booming, right? Known as NASA's backyard, with its shiny tech hubs and all that rocket science flair. But here's the twist. What went up is now slowing down fast. This once-it city for affordable living and job growth is now sending signals of a housing slowdown that buyers, sellers, and investors should all pay close attention to. From 2020 to 2024, home prices in Huntsville shot up by over 50%, landing the median price around $315,000 today. This might sound affordable by national standards, but for locals making a median household income of $60,000, things are getting tight. Mortgage rates climbing above 7% in 2024 didn't help either. Suddenly, that dreamy three-bedroom home in the suburbs is looking less like a bargain and more like a burden. And get this, inventory is spiking. Compared to last year, there has been a 32% jump in listings, with homes sitting longer on the market. Sellers are chopping prices. Price reductions on Zillow are up 26% year over year. That's a pretty clear sign of a market shift. Number 9. New Orleans, Louisiana. New Orleans, Louisiana, has always been a vibe. A city drenched in culture, jazz, gumbo, and southern charm. But let's be real. Behind the French Quarter and Mardi Gras glitter, the housing market here is quietly slipping into dangerous territory. In 2025, the Big Easy may be anything but easy for homeowners and investors. The median home price in New Orleans now hovers around $268,000, which might sound modest, but wages haven't kept up. The average household income is just over $47,000, meaning housing affordability is way off balance. In fact, housing costs now swallow more than 40% of monthly income for many residents, way past the recommended 30% ceiling. What's scarier? Listings are piling up. The average home now spends 90+ days on the market, and price cuts are everywhere. 1 in 4 listings slashed their asking price in the past 60 days. Meanwhile, insurance premiums have gone through the roof. Thanks to hurricane risks and major insurers exiting Louisiana, homeowners are now paying over $4,000 a year just for property insurance. That's nearly double what it was 3 years ago. Number 8. Denver, Colorado. Denver, Colorado's mountain backdrop and outdoor lifestyle lured thousands of newcomers over the last decade, but the housing market here is beginning to feel like thin air at 10,000 feet. After years of dizzying growth, the mile-high city is buckling under the weight of unaffordability, oversupply, and waning demand. The average home price in Denver currently sits at $581,000. That's more than 8.5 times the city's median income of around $67,000. In 2012, that ratio was closer to 4. Now, it's a stretch even for dual-income households. And mortgage rates in the 6.5% to 7.2% range are making it worse. A typical 30-year mortgage here now exceeds $3,600 a month, and that's before taxes and insurance. Inventory is rising fast. As of early 2025, Denver has seen a 14% year-over-year increase in available homes, while buyer activity is down 22%. Days on market have nearly doubled, from 21 to 41 days on average, and over 30% of listings are dropping their prices. There's also a wave of sellers who bought during the pandemic boom at inflated prices. Now underwater, they're trying to sell before bigger losses hit, but many are finding few takers. Number 7. Boise, Idaho. Boise, Idaho, was the golden child of the pandemic housing boom, a quiet, beautiful city that suddenly became America's relocation hotspot. But now, in 2025, that golden glow is fading fast, and the market looks primed for a serious correction. Home values here exploded by nearly 80% from 2020 to 2022, with the median price peaking around $515,000. But here's the kicker. The local median income is just $66,000, making Boise one of the most overpriced markets in the U.S. today. Home values are already down nearly 12%, and the decline hasn't stopped. Inventory is up 35% year over year. There are more listings than buyers, especially in the $500,000 plus range. Houses that once sold in hours now sit on the market for 60 days or more, and nearly 40% of sellers are cutting their prices. That's a sign of serious buyer hesitation. Number 6. Miami, Florida. Miami, Florida might be sunny on the outside, but its housing market is starting to show serious storm clouds. This city was the poster child of the post-COVID boom, with everyone from New Yorkers to international investors pouring in, driving prices through the roof. But in 2025, that heatwave has fizzled into a market that's cooling, and fast. Let's start with prices. The median home in Miami now costs about $580,000, up over 60% since 2020. But that's where the good news ends. Local incomes haven't kept up. The average household earns just $57,000. That means buying even a modest home now takes 10+ years of income. The affordability index is through the floor. Inventory is surging. Active listings are up 28% compared to last year, and more than 30% of homes are seeing price cuts. Condos, in particular, are struggling. Downtown Miami units are lingering on the market for over 90 days, and the Airbnb bubble is deflating with new regulations and lower returns. Number 5. Nashville, Tennessee. Nashville, Tennessee's country tunes might still be topping the charts, but its housing market is starting to hit a sour note. The once underdog city became a breakout star during the pandemic, attracting remote workers and investors alike. But now, in 2025, that housing harmony is falling out of tune, and fast. The median home price in Nashville is sitting around $460,000, which is up over 45% since 2020. But the city's median income is just $65,000. That means buyers are paying 7 times their annual income for a home, a huge affordability gap. And with mortgage rates bouncing between 6.5% and 7.3%, that dream home is turning into a financial nightmare for many. Listings are up, way up. There's been a 30% increase in homes on the market since last year, and sellers are getting nervous. Nearly 35% of listings are now seeing price cuts, and homes are staying listed for an average of 52 days, double what we saw just 2 years ago. What's causing the slowdown? For one, demand is cooling. The remote work crowd that once flooded Nashville is shrinking as employers call people back to the office. Also, property taxes are up, and locals are feeling squeezed. Number 4. San Antonio, Texas. San Antonio, Texas' housing market exploded in recent years, riding the Texas wave of population growth and affordability. But now, in 2025, it seems like this city might have gotten a little ahead of itself, and the numbers are beginning to show some serious cracks in the foundation. Here's the scoop. The median home price in San Antonio is around $305,000, up 42% since 2019. That's great if you bought early, but not so great if you're a buyer in today's market. The city's median income is just $56,000, and with mortgage rates above 6.8%, and in some cases approaching 8.0%, that makes monthly payments of $2,300 to $2,500 a heavy lift for most families. What's really striking is that inventory has exploded. There's been a 38% increase in available homes year over year, and builders are offering aggressive discounts just to move new units. Price cuts are happening in nearly 1 in 3 listings, and days on market have jumped from 28 to 63, a sign that buyers are pulling back. And speaking of overbuilding, the construction boom in suburbs like Chibolo, New Braunfels, and Schertz has led to a glut of cookie-cutter homes with fewer takers. Builders are sitting on inventory, and interest from out-of-state buyers is cooling as Austin and Dallas markets also correct. Number 3. Dallas, Texas. Dallas, Texas is famous for doing everything big: big homes, big highways, big hair. But in 2025, it's also facing a big problem. Its housing market is stumbling under the weight of rapid expansion, rising costs, and shifting demand. If you've been watching the numbers lately, Dallas is flashing all the signs of a major correction ahead. Let's start with the basics. The median home price in Dallas is now around $426,000, up nearly 60% from pre-pandemic levels. But the city's median household income is just about $67,000. That puts the price-to-income ratio well past the sustainable sweet spot. And with mortgage rates hovering between 6.7% and 7.2%, monthly payments on that average home now run about $3,300. Inventory is swelling too. Active listings are up 34% year-over-year, while buyer activity has dropped 22%. Homes are now spending 50 days or more on the market, and over 30% of sellers are reducing prices. It's no longer the bidding war frenzy of 2021. Buyers are hesitant, and investors are starting to backpedal. Number 2. Austin, Texas. Austin, Texas was the hottest market in the country for years, fueled by tech jobs, music vibes, zero state income tax, and an unstoppable migration wave. But in 2025, the same rocket fuel that launched it into the housing stratosphere is turning into a fiery crash landing. The correction is already underway, and it's picking up speed. Home prices in Austin soared an eye-popping 72% between 2020 and 2022. The median home price peaked at around $570,000, but today, it's already slid back to $519,000, a 9% drop and counting. That's still crazy high compared to the city's median household income of $78,000, meaning affordability is way out of whack. So, what changed? First, mortgage rates. At rates between 6.8% and 8.0%, the average monthly mortgage payment here is pushing $4,000, completely out of reach for most buyers. Second, tech layoffs hit hard. Companies like Meta, Google, and Oracle trimmed their Austin workforces in 2024, pulling the rug out from under local demand. Inventory is also exploding. Active listings jumped 39% compared to last year, and nearly 42% of homes for sale have seen price cuts. Builders in communities like Leander, Georgetown, and Pflugerville went all in during the boom and are now slashing prices and offering incentives just to stay afloat. Add in skyrocketing property taxes, some up over 25% in 2 years, and a cooling rental market, and investor interest is fading. Rents have dropped 4.1% year-over-year, and short-term rental restrictions are forcing many Airbnb owners to sell. Number 1. Phoenix, Arizona. Phoenix, Arizona, was the hottest housing market of the past decade that's now dangerously close to meltdown territory. If there's one city that's flashing red on every housing dashboard in 2025, it's this one. The median home price in Phoenix is sitting around $429,000, up over 70% from pre-pandemic levels. But the city's median household income is a modest $66,000. That puts the affordability index in the danger zone. A typical 30-year fixed mortgage now costs homeowners around $3,200 a month, and that's squeezing budgets like never before. What's worse, inventory is swelling like a monsoon. Listings are up 31% from 2024, and homes are sitting on the market for 60-plus days on average. Nearly 45% of homes listed in Maricopa County have reduced prices. That's not a cooling, that's a full-on market reversal. Let's not forget overbuilding. Developers flooded the market in places like Buckeye, Queen Creek, and Surprise. Now, those homes are sitting unsold, with incentives like 2-1 buydowns and cash back to close. The rental market's not much better. Rents are flat, Vacancies are climbing, and short-term rental saturation is cannibalizing returns. In short, Phoenix looks like a textbook bubble, rising fast, inflated beyond fundamentals, and now deflating just as quickly. If 2025 brings economic tremors, Phoenix might not just wobble, it could crash hard.